What's up, guys? Philip at Trade Genius. All right, we're going to talk about Bitcoin. Lots to cover again since the weekend. Trump tweeted out that he was not a fan of Bitcoin. Prices rolled over since then. So we're going to talk about the implications of that. We're going to take a look at our weekly and daily charts, show you the ranges in play there. We're also going to take a look at our parabolic structure and see how price action is shaping up against that. Take a look at the Fib Multiplier, talk about levels there. We'll also take a look at our market internals and see what that's telling us. Crypto fear and greed at a big drop. We'll talk about that. Take a look at our Tether chart and see if that's going to lead us higher. We'll check in on our CME futures gap charts, see if any gaps are looking to be filled. And last but not least, we'll take a look at our Chinese yuan line and see if that's telling us anything bullish or bearish. All right, guys, let's dive into this video.
Trade Genius.
All right, guys, back on Thursday afternoon, Donald Trump tweeted that he was not a fan of Bitcoin and other cryptocurrencies which are not money and whose value is highly volatile and based on thin air. Unregulated crypto assets can facilitate unlawful behavior, including drug trade and other illegal activity. Needless to say, you could also say that the dollar falls under the same kind of concerns. But really, we're not going to get into that. We're just going to talk about, did this really make Bitcoin roll over? If you go deeper into that tweet thread, he then switches over to talking about Libra's virtual currency, which I think really was the meat of this tweet, talking about if Facebook and other companies want to become a bank, they must seek a new banking charter and become subject to all banking regulations, just like other banks, both national and international. We only have one real currency in the USA, and it's stronger than ever. So this tweet really isn't very surprising from that standpoint. I think Facebook's Libra project is under scrutiny. The feds have even talked about how it really can't go forward unless it's been thoroughly reviewed. I think the feds' comments toward Libra have been much, much more negative than anything they've ever said about Bitcoin. So I think this isn't really, Bitcoin becomes a thing that might get banned. This is more about addressing these tech companies that want to get into the banking sector, because keep in mind, that's not what the Wall Street and the banks in Wall Street want to see. That's their domain. So it does not surprise me that you would get this kind of reaction from President Trump. You can't really ban Bitcoin anyway. You know that Bitcoin is code ultimately, and you can ban the on-ramps, or you could make the regulations such that, let's say they consider cryptocurrencies too volatile. You have to be an accredited investor to trade them. And so they could force the domestic exchanges to do something to that effect where they won't allow the retail guy to trade. But I mean, as far as banning it, I think it's obvious that that's not possible. And you also have Wall Street has already embraced it with the futures markets. Those aren't created lightly. And I just don't think that that's a likely scenario. But whether or not this caused that rollover, I think as we get into the technicals of the charts, you'll see that we were probably due for a pullback. So I think it's more technical than it is fundamental based off of this type of news. All right, so that being said, let's take a look at Bitcoin, and we're going to look on the weekly chart. So again, from just big picture stuff, we've run up from the lows, the bottom of the bear market, up to the fib zone area of resistance from our highest all-time highs, right? And so this action here is actually very, very expected. You run up into this fib resistance area. What's interesting is when we talked about when we were making this run up that we wanted to watch this 11,800 area, because that was a level that was, I think, critical in the weekly failure. And then the other one was these wicks here at around 13,000. But when price, if you look on the weekly, we failed to close above this key resistance level. During the week, we shot past it and looked like we just totally destroyed it. But ultimately that move ran out of gas. So it's interesting that we have not seen a close over that level. And on the weekly, that's what I'm really looking to see if we can get. I'm not necessarily concerned about closing over these highs just yet. I want to see a close over this 11,800 area. And then I think that would probably give the bulls something to work off of, and then get past the next area of concern, which would be around that 13,000 level. I think if that can get cleared, I think this would be a quick zip up into this area towards the 17,000. Also of note, the 0.382 level at 96.40, we've pulled back to that, and that has held, and we're getting a subsequent bounce. So let's see how this plays out. We'll talk about the expected price action here going forward over the next week or two. All right, switching to a daily chart. All right, so the daily chart, what we're doing, we're keying in on a couple of ranges here. One is from the most recent highs down to the most recent lows. Okay, we came up, we severely tested that 0.705 level, could not close above it though and have rejected that range. So the downside target for this is going to be 86.55. One thing to note, talking about our moving averages, the weekly moving average, the weighted moving average 20, we haven't touched yet, although it's getting closer, but we haven't touched it yet. What we did do is finally break through and touch the weighted moving average 65 finally. And so that usually produces a bounce. What I think is going to happen is we get into this area that we talked about in the last video of consolidation. So we could bounce between these two moving averages, kind of similar to what we saw down back in here for several days. And then what we'd be keying in on is a break back above the WMA 20 on the daily. So we're playing out this range. I'm going to say that I do not think the 86.55 level at this point looks probable in getting tagged here. I think we're going to bounce first and consolidate. But if that consolidation does break down, then this probably could be more realistic as far as coming into play. And then that would take us down to more of our weekly weighted moving average of 20, and that would kind of mess up the parabolic structure. But for the immediate term, I think this is going to chop in a range here from 10,000, low 10,000s to about 11,000. Look for that chop, and that'll be a very tradable range in the next few days, in my opinion. The other thing is we've got this range from this lows here of 7,427 to the most recent highs on this move, and we're holding that fib range as well. In fact, we tagged the 618 of that, which is 99.01 area here, and the low on that candle was 98.57. So tagged that pretty well within a few tens of dollars, and has since bounced off of that level. So again, I think this is a good candidate for a local low and then a bounce and then some consolidation. And if that plays out, that's going to look like this parabolic structure stays intact, and then we look for a break again of that weighted moving average 20 area, which currently is at 11,350 approximately. All right, speaking of parabolic, let's take a look at the parabolic chart. All right, so we have our base 4 still. Remember, we said that typically we'll see a rollover, kind of like what we see here. We've gotten that. That rolled over deeper than what I was expecting. Last video, we talked about that 11,750 area, those lows getting tapped and zoomed through that and ultimately eked out a low of 98.55 on Coinbase, but now we've since bounced in. So anyway, the structure is still intact. The last consolidation phase was about 31 bars, and we're at 21. They've been shrinking by about 5 bars each. I think that shrinkage would probably speed up. So, maybe we see a 10-day shrinkage, and that would give us a 21 bars, which would take us out to July 19th or so. That remains to be seen. But at this juncture in the month of July, I would start looking for a move back above 11,000 if this thing's going to stay intact and we start seeing this overall move higher and blow off type move that could take us north of that 20K up towards 30K. So the structure is still intact there so far and still looks bullish. All right, let's take a look at the Fib Multiplier Chart. So the Fib Multiplier Chart, again, this is end of day data on BLX, so we'll need to, it's not reflecting this current move up back above 10,400. But as you can see, like we said, we broke the Fib 2 line. Typically, that'll open up the doors for the next area, which would be Fib 3 up to the 17,000. And we have not touched this Fib 1.6 line. And I suspect that we won't just yet, and more likely we see this return back up. But, just kind of giving you a bird's eye view of where we are in relation to these fib levels, because price does tend to react off of them. As you can see, the Fib 2 line's kind of been like a midpoint or a buoy point for price in this area for consolidation. I think we do ultimately see a move back toward that level. All right, let's take a look at the internals now. And the internals I want to talk about a little bit, because now this is on a 30-minute chart, so we get more detailed data. Now, if you notice through these areas here where price is going up, what's the funding rate been like on BitMEX? It's been to the positive. That means that there's more people on the bullish side. Now, normally you would think, well, if that side of the trade's crowded, shouldn't that be counterintuitive? But BitMEX, the average trader there is a bit more sophisticated. So I think when we see the funding rate telling us that that side of the trade's crowded, most of the time they're right. And, think of it like fuel for the move, okay? When the funding rate, as of the most recent price action, has been negative or flat, tend to enter into this area of consolidation or chop or a little bit of a downward bias. And so we had this last area of positive funding rate, and that created an upward move on price. Price then dropped. Also, one thing that does play into this is that when price does pull back, a lot of these long stops will get hit and you get a long squeeze. So you will get a pretty decent size move down if the technicals break down, similar to what the end of this move was. So these moves, this will be correct in the move as far as which direction, but when it ends, it has a pretty violent end, and that's because all of these long positions are getting stopped out. Okay, so that brings us to now that we have a negative funding rate, and where we've seen periods where we've seen negative funding rate after a move up, similar to what we saw here. You get a period of chop. Here was an area where we kind of moved up after positive funding rate and then switched to negative, and then that was basically people getting short because they thought this level would continue to break down. It ended up chopping because we were in an overall bull market. I think that's still the case. So again, I think this plays into where on the parabolic chart you will see chop toward the end of these consolidation phases, and then we start to move back up. Again, that points to more of what we're expecting, which is chop and then up out of this range. Looking at the short exposure, again, talking about this drop in short exposures like we saw here and like we saw here, and we said, this usually precedes a drop, and sure enough, we had another dump there. So those are very important to keep tabs on. Again, short exposure, if we zoom in, both the short and the longs are dropping, and that's another thing that would bode well for a choppy environment. Typically, when you see both of those start to drop, so similar to here, you see the long exposure and short exposure dropping, and you're getting a negative funding rate, and we chop. So that's another clue that we could be range bound here for a few days. All right, let's take a look at the crypto fear and greed. Okay, so we have a reading of 16, pretty low. Let's take a look at the chart. So chart had a big drop. We were at 61, dropped to 16. Prior to that, we had a drop of 33. Then it moved up to 61, which I thought was a little odd considering the price action on July 14th. I thought that was a big jump considering how weak the price action was. And then on this drop, we had a drop of 16. So 16, you could almost just, normally what we say is if you get a drop below 16 or 17, you wait for an uptick on the crypto fear and greed, and then that's your signal to get long. And ultimately, readings down toward 10 is just kind of a get long reading. But 16, that's very, very bullish. We should see a bounce very, very soon, and a decent one at that off of this reading. So we're getting to an actionable point here with the crypto fear and greed index. All right, let's take a look at the Tether Market Cap. So Tether Cap, again, nothing really bearish here. If you look at this area here where it was consolidating, kind of like a less volatile version of our current area of range and consolidation, you'll notice that as we get toward the end of that, you can see these little dips with the Tether Cap, and then it resumes higher. So what we're looking at now is basically we're looking at this pullback is similar to this pullback, and what we want to see is the Tether Cap continue to rise now at this point, and we're seeing that. So this basically says buy the dip, and so far this would be indicating that it's going to be leading price higher. Again, Tether is money coming into the system, doesn't go to work immediately and gets put in the queue, but will affect price action on a delayed basis. So similar where you saw a consolidation here, you get the consolidation a little bit later here, prices moving up, and then you get this move up later here, and then it kind of consolidates a little bit here. We see that here, and now continuing to move up, and so we are expecting to see that with the price of Bitcoin, unless there's an event or something and this drops dramatically. Right now, this says that this previous price action we saw should continue, and we'll see that come out of this range that we're in. The CME gap, okay, these are the futures, right? And the gap we have from the weekend, we obviously had a very bearish weekend. So the gap currently on the daily chart is 11,188. If we drill down to the 4-hour chart, we actually have a different level, and that would be 11,640. But because, the lows of the day on Friday were lower than the actual close, the daily chart shows a different gap. So just keep that in mind. The daily gaps are usually what people are looking at, not so much the intra-hour type levels that are shown here. Unless that intra-hour level was like the low of the day, then they'll both match up. But in this case, if you're looking at this 11,640, that may not fill. I would be more concerned about when price tags this 11,195. That would be the top of this current bounce from these lows, and then this thing rolls back over, but then starts to consolidate. All right, last but not least, let's look at the Chinese yuan line. All right, guys, so I have the charts on a percentage basis here, starting from back here. Again, last video we talked about how the yuan was leading the move, either up or down. Since the weekend, as we were going into the weekend and we were talking about tapping these levels here, and we sure did, we blew through them, and now we're probably going to come up and retest those. This, we said once we get into the weekend, we'll see a little bit of the decoupling on the yuan, and sure enough, we did. The yuan, since the weekend, has come down a bit on that devaluation line. So we'll be eyeballing this line for any move up during this consolidation phase to kind of give us a heads up if we're leaving this zone anytime soon. So currently, nothing super bullish here. Been a lot of sideways since July 10th, so last 5 calendar days or so, hasn't really gone anywhere. So Bitcoin is actually a little more bearish, as far as the move down. It's divergent from, let's say, more of a choppy action on this devaluation line. So let's see if we can get a bit of a bounce here, get back to, let's say, the 11,000 level, kind of correct this bearish divergence, and then see what the yuan does later in the week. All right, guys, so that's pretty much it. I think the parabolic structure is intact. I think now we look for, see if we get this chopping action that we typically see at the end of these bases. And if that's the case and we see that, next thing would be to see if we can break back above the 11,000 area. And if we do that, I think that's going to be pretty bullish and could possibly get us going now out of base 4 and then into the resumption of this parabolic trend. All right, guys, well, that's it for this video. Appreciate you guys watching. Please hit like and subscribe. That really helps us out. Got any questions, please leave them below in the comments, and I will see you in the next video. All right, guys, take care. Bye-bye.
Trade Genius.